Hello everybody and welcome to Before the Bell in 3D. This is week 39 and therefore that is September 25, 2023. I will remove the introduction slide right now so I can say hi from the screen. Hi everybody, my name is Jose Blasco. It will be my pleasure to go over the session today as we are getting organized in these Monday sessions that we do where we prepare for the week ahead 1 hour, more or less 1 hour before the US market, the US equity markets, I should say, will start trading. And, that's a great time to get organized, to have a great trading week ahead. So that's the plan. And the way we're going to do it is, as always, we're going to be using real-time charts. We're going to be looking at 5 key markets. And we will also complement this market analysis with some of the information found on our newsletter, which if you do not receive, let me share with you the QR code and the URL on the screen that you would want to scan or follow. So you can sign up for the newsletter because it's free, and then you get all this information in your inbox. So if you happen to not to be able to attend the sessions live, certainly you can just use the email information, which is going to be very very handy to have it close by. So anyway, I am now moving to show you the list of 5 markets we're going to analyze. So we're going to be looking at S&P 500, the largest equity index market in the world, crude oil, largest energy market in the world, gold, largest metal in the world, US dollar, currency that takes place in 80% of transactions worldwide, and the back Bitcoin, which is going to be the most important, most relevant cryptocurrency. So by looking at those 5 markets and understand what is it that we have in front of us, this hopefully helps you to be focused and prepared again for the week ahead, no matter your trading style, okay? Because really the analysis I'm going to do, I'm going to do it using the daily time frame. So here, as you can see, I got the daily time frame of the S&P 500 futures, and using this daily time frame, again, I guess that the analysis is applicable to many different trading styles. Now, again, for sure, you can replicate what I'm doing with, let's say, the 60-minute time frame, the 5-minute time frame, the monthly time frame, the weekly time frame, depending on your trading style. If daily is not for you, okay? But at least I'm pretty positive this is going to be helpful for the majority of you, and if not to you, at least you can replicate the same thing I'm doing with the daily with other time frames. So let's begin with the S&P 500 futures, and the first thing that we are going to analyze is what we call the climate. To analyze the climate, we're going to be looking at those dots in the bottom part of the screen, which, as we see right now, the last dot on the right, which is the present, is a thick red dot. Red and thick, because sometimes they are red but they are not thick. That means not confirmed climate, where right now we have it red and thick, which means that type of dot represents climates that are confirmed. And a confirmed climate basically means that you have a statistical advantage by trading in the direction of the climate, in this case to the downside. So what do we have? We have a confirmed down climate in the S&P. Therefore, being a seller carries with it a greatest probability with it than being a buyer. That's what we know up to this point. Okay, I have more to share. I may actually contradict myself a little bit in a moment, so listen carefully. But basically, this is what I'm saying, going back to the newsletter. Current status, rainy, down climate, that's what we got. By the way, the auto climate tool, as well as the auto UFOs tool that I'm using here on the top with the flying saucers, the UFOs, on-field orders, UFO on-field orders. So those tools, you can take a look at them on our website in case you're interested to take a look. Auto Climate, which is the one I'm discussing at the moment, is a free tool. So you can go find out more information about it on the website, and you could just get it. Okay. Anyway, so now, why did I say I may contradict myself? Well, because we are not only looking at what the current status of the climate is, we are also looking at what statistics suggest a normal thing to be is. And in this case, in the case of down climate, a normal thing to be is waves of 3 candles at a time in the daily time frame. Well, guess what? This is candle number 6. So in other words, we surpassed by double the amount what a normal duration for a climate is. So in other words, statistically speaking, we are dealing with a climate which is statistically unsustainable. Now, can it continue moving to the downside? For sure. We've seen things like that in the market before, isn't it? Something that is not normal or exaggerated, and it keeps going, right? So there is a saying in Wall Street that says that the markets could remain solvent. The markets could remain irrational for longer than we could remain solvent, isn't it? So nothing new. But of course, statistics are a fantastic, if not the best, reference point in order to plan trades and know what to expect from the market with higher odds in your favor. So right now, when looking at the climate, if I go back to looking at those dots, let me zoom in. So we can see how we got a thick and red dot. Okay, so this has been said. But now notice the statistics here. For down climates, it's 3, where the current stage is 6. So in other words, we are dealing with a market that is statistically unsustainable. So now, with all of this said, the normal thought here would be that you would expect the S&P to go back higher because it's unsustainable, statistically speaking. So you will at least expect it to correct to the upside in the context of a downtrend or something like that. But the reality is that there is nothing to stop the S&P from going lower unless we get to 41.75. What do I mean by that? Well, we got a buy on field order by UFO. UFO equals on field orders. Okay, so we have buy on field orders located at 41.75. I mean, for the S&P to stop and turn, you will need the UFO to be where the current price is. If the buy on field orders are where the current price is, then I would expect this orange move to the upside. But the reality is that there is no green UFO where the current price is, and therefore there is nothing to stop from the market to fall. And this is one of those cases where, while the climate is statistically unsustainable, I would not be surprised if we have another big wave like this one, which lasted more than 3 red dots. And this one is 6, and we may need to have more extension because the S&P, at least at this moment in time, doesn't have anything to turn the price until we get to 41.75. Of course, when we come to 41.75, buy on field orders will kick in, and therefore a turning point is expected. And when that S&P market gets to 44.62, then sell on field orders are expected, and therefore a turning point to the downside is expected. In other words, our UFO technology is fantastic at identifying turning points in the market before they have happened, meaning that it's powerful to use this tool to set entries and exits. Only entries, only exits, or both entries and exits, depending on your trading style. Many traders combine it with other things. Could be support and resistance, Fibonacci, Bollinger Bands, you name it. Other traders, like myself, I'm more in the purist side, and to me, it's all about UFOs. But again, there are different ways on how to use it, and certainly there is plenty of support and supporting materials in our ecosystem. We'll send you a user guide when you register to the tool, etc. And again, there are many ways on how to use it. Okay, but keep going with our market analysis. So we are looking at on-field orders located at 44.6225 to sell, on-field orders located at 44.71.75 to buy. And then finally, the last dimension is what we call the expected move. Now that we know what to expect from a direction point of view, which is the climate is supposed to not to keep falling, but probably it will because there is nothing to stop it until 44.71. We know what to expect from a directional move, and we know where to expect. We know where the next turning points are likely going to be, 44.62, 44.71. So now that we know those 2 dimensions, the third dimension is, okay, what about speed of movement, right? Well, in a daily basis, we're expecting 47 points. On a weekly basis, 104 points. On a monthly basis, 217 points. And you may wonder, and how do you know that? Well, this is because we are taking the prices of options on the S&P, and we are reverse engineering the options pricing models. So given the current price of the options, we then expect a specific size of a move, because options got something built in, which we call implied volatility. If you are an options trader, you know this. And the implied volatility has different meanings, one of them being what is expected. Because when people expect a lot of risk, a lot of opportunity, they don't mind to pay a lot for the options, where when people expect nothing to happen, people don't want to pay too much for the options. And therefore, the price of the options represents how much people expect from a movement point of view as an average overall across market participants. So in other words, by looking at the climate, the UFOs, and the expected move, well, hopefully now when it comes to the S&P, which is the equity markets, you know better what to expect. The next market that we're going to analyze is crude oil. And now I'm going to speed up. I spend a little bit of sweet time to go over the rationale of the things I do. So now it's understood, and now we can just fly through the other markets. The next one in line is WTI crude oil. Crude oil market, huge, humongous energy market in the world. We have a confirmed blue climate. We are dealing with statistics that in a normal case would be 7. The current duration of the climate is 19. This is crazy. It's almost 3 times more than what's normal. But why is that? Well, take a look. The next set of unfilled orders to sell is located all the way to 100. So we may need to see a little bit of a change of climate, because definitely 19 is almost 3 standard deviations of a normal thing. That is, statistically speaking, close to impossible. But it's happening, isn't it? So extreme movement on crude oil. I mean, and the prior wave, to be honest, was also very much extreme, which that has a lot to do with the dollar index, by the way, which we'll analyze in a moment. But again, coming back to the current wave, so we are talking about a very extended move, but again, there is plenty of room for crude oil to keep going. So will we have a minor change of climate, maybe for up to 5 candles on the way down and then go back up? I would think so, because it's very much extended, but I would have no idea where the turning point is going to happen, because my only visibility is 189 when it comes to the unfilled orders. So we may have the market fall from where it is, come to this UFO. It may take 3, 4, 5 days, and then from there it goes. That may be the case, or maybe it just keeps going. Okay, so again, very difficult to trade when the climates are so exaggerated, even though this is the real situation we have with crude oil, and therefore this is what we need to take into consideration. I mean, if you are like me, I don't trade crude oil on a daily time frame. When I have a situation like that, I may move to a 5-minute time frame and do something intraday short term. Fine, but definitely a situation where the climate is almost 3 times what's normal, it's telling you that's not normal, and therefore, what is your reference? If you use statistics as a reference, well, it's not normal behavior. And if you were to guess what's going to happen next, well, it's a guess. So you are not using any reference, really. You are guessing. So yeah, what's the good choice? Well, not to trade, for a day or two, and then back in business, unless you use intraday timeframes. So unfilled orders to sell 100 something, unfilled orders to buy 88.15. So going back to what we have a sunny climate. Normal thing is 7. We've been in this climate for 19. Sell unfilled orders 189, buy unfilled orders 88.15, and the expected moves, looking at options on crude oil futures, 1.84 per day, 4.05 per week, 8.42 per month. Next market for us to analyze is going to be gold. Here we go. 1, 2, 3. Here's gold. And with gold, we have a confirmed climate to the downside. This one is a tradable climate, because we're talking about current status is 2. A normal thing to happen for down climates is 5. So you are in the beginning of a climate which is likely going to propagate for a few more days. And really, the thing is that unfilled orders to sell are located at 1986, so that's quite higher, 40 points higher. Unfilled orders to buy are all the way down there. Of course, because the climate is down, you would expect gold to fall, but in order to find a good entry, of course, you would need to go to a lower time frame. The beauty here is that if you enter in a lower time frame, you may ride a move that then propagates into the following timeframes. So you may get a 5-to-1, a 10-to-1, a 15-to-1, depending on how you set your entries and your exits. So the opportunity potentially is fantastic. Whereas with crude oil, again, my suggestion was to not trade, given the fact that the climate was completely exhausted. So in this case, it's not the same. 2 out of 5, it's pretty healthy. So climate, rainy, 2 out of 5. 1986.7, that's the sell orders. 1828.7, that's the buy orders. An expected move, 13 points a day, 29 points a week, 62 points per month. This is what is expected. Next market in line is the US dollar index. Let's go take a look at the dollar. Amazing moves on the dollar, to be honest. Everything that has been happening to all other markets out there is all because of the dollar. Really incredible moves. So we are dealing with an up climate. Current status 17. The normal thing is 5. So again, now you understand why crude oil is going crazy, isn't it? It's all about the dollar. So we can see this behavior here. So again, I'm not going to repeat myself. Same comments as what we saw earlier. Now, if you are a daring trader and you want to be more on the aggressive side, the difference between crude oil and the dollar index is that the dollar index is inside of a red UFO as we speak. So we are at a price point where sell on field orders are available, and therefore, more likely than not, the dollar will fall. Especially given the fact that the climate is so exhausted. I mean, I do definitely expect a move down from this price level. And if that's the case, we may end up going back to 104, where the buy orders are, and from there go back higher. So here, depending on your trading style and how you set entries and exits and stops and all of that, so you may have a valid entry or not. Again, from a rational point of view, I already expressed my analysis here. From a trading point of view, of course, you need to evaluate this opportunity yourself, depending on your specific set of rules. But definitely, being inside of a red UFO, that's a totally different story, isn't it, compared to what we saw on crude oil. So, what do we have? 17 out of 5. This is a very, very sunny climate. Sell orders 105.33 were there. Buy orders all the way down at 104.24. An expected move at a rate of 0.6 points a day, 1.02 points a week, 2.11 points per month. The backed Bitcoin is the next and last market in line. Let's take a look. We are dealing with a non-confirmed climate. There is not enough decision in that particular market to confirm anything that gives us a statistical advantage, and therefore the dot became thin from being thick for a few days. The analytics built in our auto climate tool decided that no odds anymore. So now, directional speaking, we're moving up. So we've been moving up 8 candles. A normal thing to happen suggests 6. But look, we are right there in the middle, halfway distance between the red and the green. So really, anything could happen. And given the fact that the climate is not confirmed, I mean, trading Bitcoin on a daily time frame is a real gamble. If you are okay with me phrasing it this way, because it is. But of course, by looking at different time frames, you may have tradable opportunities. But on the daily time frame, definitely not today. Okay. So summary: we are dealing with a sunny climate, 8 out of 6. 29,000 plus is where the sell orders are. 24,800, that's where the buy orders are. Speed of movement expected at a rate of 600 plus points a day, 1,400 plus points a week, 2,900 plus points per month. And finally, as we are getting ready to conclude our session for today, we're going to look at the economic calendar very quickly here. I would say a pretty calm week. I mean, there are important reports like every single week. I mean, GDP in the UK, for example, is that important? Of course, very much. Retail sales, I mean, in the world of inflation, do we care about retail sales or the CPI in Europe? Of course we do, right? GDP in the US, all of those are definitely powerful figures. But again, compared to other things like last week, for example, with the interest rate number in the US, so I would say this week is a pretty normal week. For sure, the calendar is there in the newsletter for you to consult in a daily basis and not to be caught by surprise. But I would say it's pretty calm. Okay, cool. Okay, so before we conclude, as always, I'd like to point at the fact that we are very proud of our book. I am highlighting a QR code on the screen. You can also see the link here, tradewithufos.com/book. Our Forex book comes with a course with it. And with the course, you also have 3 months of free access to our technologies, including the UFOs and everything else. So you can not only learn from the book and the course, but also practice. So it's not about knowledge, it's about building skill. So you actually become a person who trades instead of a person who knows how to talk about trading. So you actually can do it. And because you have not only the education, but also the tools, which is critical. And again, hopefully this helps you. You may notice the book is about Forex. It doesn't mean this is a book that it's only useful for Forex traders. This book teaches you how to trade no matter what you trade. We just happen to use Forex as an asset because it's the most generic asset you could find, because everything trades in currencies. When you buy stocks, for example, and you pay $200 per share for a stock, well, I just said $200, which dollars is a currency, even though you purchase shares. So understanding currency trading, it's probably the most universal way on how to understand the markets, and then you can extrapolate what you learn in the book to whichever other asset that you are trading. Anyway, with all of this said, we are done for today. As always, it's a real pleasure to begin the week with you guys. Hopefully, these sessions are useful. If you have any question, feel free to contact us. There is a question section on the website. You can find it and send us your questions, or you can just email us, or even better, attend our live sessions, including the open meetings that we do twice a month, open to everybody, clients and non-clients. So if you want to take a peek and understand better what we do, just join us. Don't be a stranger. And definitely, we welcome non-shy participants, people that are passionate about trading, eager to collaborate and complement conversations. So no matter if you are a client or you're not, just join us and speak up, ask your questions, phrase your concerns, share opportunities or thoughts that you may have, and we will grow together this way. So let's have fun. Let's see you around. Have a great trading week ahead, and see you soon. Take care, everybody. Bye bye.